Hello, everyone. Welcome back to the channel. This is Fair Value Finder, and today we have another head-to-head. And this is between two drugstores, CVS and Walgreens. We're going to take a look at what the better company is if you were to purchase one of them. Because what I'm looking at the numbers, I'm not sure that I'd want to purchase either of them. And you will notice that CVS is down over 8% today, and that's because there is some big news. CVS stock was dropped by one of the insurance partners that turned to Amazon. And Amazon is a player in this sector. So they just recently got into it, and it looks like they're going to be growing pretty fast. So that is something to remember when we're looking at these companies. Walgreens is down over 3%. No direct news related to them. They've kind of been on a downtrend for a little bit here. And it's just continuing probably in relation to that. So let's get into the numbers and see which one of these is a better company. And I'm trying to make each video better than the last. So this time we got some graphs to look at rather than just numbers, at least for the financials. Maybe in the future I will add all of these, but it takes a lot of time and calculation to do this. So I didn't want to spend too much time on it in one sitting. We'll start with the revenues, and a lot of these numbers seem crazy because they're such low margin companies. They are in the business of selling a lot for a small profit. And when we look at things like $200 per share in revenue, I had to go back and double check all the calculations and the data being pulled because that seems absurd, but they do make so much money, at least on the top line. But what we see here in blue is CVS, in orange is Walgreens, and we can tell CVS is pulling in more revenue per share, and they also have a better trend upwards. The Walgreens looks a little flat, and CVS is going upwards. Cost of goods, this one, the lower number is going to win, of course, because that means they have lower expenses. And so we have Walgreens winning for the current value and the growth, because we see CVS is still on an upward trend and Walgreens is still kind of flat. Gross profit, they're separating. CVS is definitely pulling ahead on that gross profit, and Walgreens is staying flat right in the high $30 per share. And as a percentage of the revenue, their gross profit percentage, we're looking at Walgreens having a higher gross profit percentage than CVS. And they're both pretty flat, but CVS is pulling it out and winning on that. So gross profit, CVS is winning. Profit percentage, Walgreens wins on current value. CVS has some better growth. Expenses per share. CVS is on a very big uptrend, and yet again, Walgreens is just flat. And we're going to give both of those to Walgreens because we do want lower expenses. Expenses as a portion of revenue, this one is a little different. Walgreens is kind of all over the place, and CVS is very flat. And so CVS is winning this one because they are lower. They come in with a higher revenue. They might have some higher expenses, but as a portion, their expenses are lower. This brings us down to the net profit. And these graphs are just weird. There was a crossover in 2022, and now they're back to what they were. But CVS is typically winning on the net profit, and they appear to have a better trend because Walgreens, actually, if you look from 2019 to 2023, the 2023 value is lower. They dipped down in 2020, and they finally surpassed it in 2022, and the expectations are they're not going to really hold on for the rest of the year, and it'll dip back down, giving them a lower net profit percentage. When we look at the percentages here, we see Walgreens is kind of all over the place. CVS was very flat up until 2022, and they're getting it back in line, it looks like. But CVS wins on all of these. The revenue making it from the top line to the bottom line is a whole lot better for CVS. Even though Walgreens had better gross profit, their expenses were so much higher as a portion of their revenue that their net profit is not as good. And then we have earnings per share. And this is very similar to that net, of course. And we're looking at CVS winning on value and growth. And then for the earnings yield, we are seeing Walgreens on a run since 2020, very steep, surpassing CVS. And that could be off of a declining share price, most likely is. I mean, we saw the chart. So what we come up with here is our overall winner for financials is CVS winning 6 of the 10. And the best growth prospect is also CVS winning 7 of the 10. So they're even better at growth than they are at current valuations. So clearly, financially, CVS would be better to go with than Walgreens. And of course, these are per share numbers. So the share count is going to have a big impact on them. And that's the next thing we're going to look at. So here we see that Walgreens has a much smaller share count, and they're actually buying back shares while CVS continues to issue shares. So CVS is really killing it in growth then, because they're issuing more shares and they still have better growth prospects when they're diluting their numbers. But Walgreens is doing what we prefer to see with buying back, and they have way lower shares. So you own a larger portion of the company. So Walgreens is winning on that. Shareholders' equity, 54 to 34. CVS is winning, but Walgreens is growing theirs faster at 6.7%. Free cash flows, 10 to 3. CVS wins, and they're growing it faster at 9%. Walgreens is actually losing out on free cash flow. Free cash flow yield, of course, CVS is going to win on that front too. With 4 to 2, they are growing theirs at 1%, and Walgreens is losing out on theirs by 17%. Assets, 174 to 104. CVS is winning with more assets, but Walgreens is growing theirs faster, 10% compared to 1%. So down the road, it'd be a few years down the road, they could pose a bit of a threat on this front. Liabilities, we want lower liabilities. So Walgreens wins 69 to 119, and CVS is lowering theirs while Walgreens is growing theirs. So CVS wins on the growth front. Book value, 55 to 35. We'd, of course, want a higher book value. So CVS wins, and they're both losing out on book value, but not as fast for CVS. And this is one of the reasons why I say, I don't know that I'd really want to buy either of these stocks. And the next big reason is this debt to equity. We want a debt to equity under 1. Walgreens wins with 2.03 compared to CVS's 2.19. CVS is shrinking theirs. So at the rate that things are going, in a year or two, CVS will be better on this front. Cash per share, $10.14 compared to $2.96. CVS wins, and they're growing theirs faster, not by a huge margin, by less than 1%, but they are growing their cash faster. To be fair, they do have a smaller starting point, so on a dollar per dollar basis, and honestly, CVS has more shares too. So CVS is definitely growing cash faster, has more dollars and more shares. So they need significantly more dollars to keep up with Walgreens. Dividends, Uh, CVS pays out 226, Walgreens pays out 192. And CVS is growing theirs faster, 4.1%. Walgreens is barely raising theirs. So I don't know how long that's going to stick around. We'll see. Dividend yield, Walgreens is a whole lot better. Their share price has just been killed. So that, of course, is going to drive up the yield. Like they were $75 back in 2015. They were $70 2018. So just before we started looking at them. And now they're less than 30. So they've lost over 50% of their value. And of course, that's going to drive up the dividend yield. Share price, a cheaper share is nice, but Walgreens has been losing out year over year while CVS is gaining year over year. And that's probably explains the higher share price. ROE, we want at least a 20. Neither of those hit that. And the fact that they have so much debt to make their debt to equity over 2 means that these numbers are skewed higher and they are not getting a lot down to the bottom line because this ROE is the return on equity. So it's the net income divided by the shareholders' equity to figure out the money that we as shareholders are putting in, what are they able to do with it? What kind of returns can they achieve? And our equity is diminished by debt, which would skew this number towards the upside. So think of it as every dollar that you are giving to Walgreens, they are growing their business by at most 14.8 cents. And then we have the PE. I mean, we want a lower PE. 29.76 is really high, especially with the growth of these companies. So that's not a great PE. And it's growing year over year. So apparently the share price is running while the earnings are not growing quite as much. And so Walgreens wins it here with 7.44. That's a low PE. Ideally, this would really stay flat, but we have one that's pretty high positive and one that's pretty high negative. So I'm not liking what I'm seeing with those. And then when we go into the actual financials, I know this is a little messy. This is strictly the data. But we can see that CVS is growing their revenues at a good rate, but their earnings are growing at a good rate. And that's what we like to see. But then we get to Walgreens and we see that revenues are also growing. While their revenues are growing, 1.32 to 1.38 to 1.45, we have earnings moving from 5.02 to 4.01 to 3.89. So it's looking like analysts are projecting them to have lower margins or higher expenses. The fact that they already have higher margins than CVS means that if CVS is getting this much more business, Walgreens might want to look at cutting some prices and bringing down that gross margin to something more in line with what CVS is doing to try and get more revenue. But we'll see how things go. That's likely why we're seeing what we are on the projections for the company. So what we're looking at here is if you want current value, CVS is probably the stock for you on financials. I'd consider this whole section to be general investor management. They're better on that. They're kind of tied on growth of it. A balance sheet. They're better on their balance sheet and they're better at growing it too, but just barely. They're pretty close. And then when it comes down to market value, Walgreens is definitely winning out, and again, they're tight on growth. So overall, the stock here would likely be CVS. They seem to have a better operation, more consistency, more growth potential. And Walgreens is definitely going through some struggles. And another and they just had the Amazon thing thrown at them too, which is going to make things even harder for the both of the stocks. It's probably going to affect CVS a bit more than Walgreens, but we'll monitor them and see how everything goes. But I want to thank you guys for watching. Please like if you enjoyed the video. Comment if there is any other matchup that you want to see, and subscribe so you can stay up to date with everything. And I'll catch you next time.